Welcome to Mortgage on My Mind, where we take the mystery out of mortgages and make dreams of home ownership a reality. I'm Natalie Salins, a top 1% mortgage broker with 20 years of experience, based right here in sunny Los Angeles. If you've ever wondered about pre-approvals, appraisals, or what loan product is right for you, don't worry, I've got Mortgage on My Mind, so you don't have to. Each week, I'll bring you expert advice, real-life stories, and insider tips to help you navigate California's competitive real estate market with confidence. Whether you're buying your first home, refinancing, or just curious about how it all works, this podcast is for you. So let's talk mortgages, demystify the process, and make your real estate goals a reality. Ready to get started? Let's dive in. Hey, everybody. Welcome to Mortgage on My Mind. I'm Natalie Salins, your host. And today we have with us Chris Kennedy. He is a partner at Reliant Lending, an independent mortgage brokerage in Sacramento. He is a U.S. Navy veteran with over 25 years of industry experience, and he specializes in diverse loans to guide clients towards confident financial decisions. He is also the founder of Sacramento Business Builders, which is a local professional networking group. Hello, Chris.
How you doing?
Thank you for being on. Good. I'm good. How are you?
Perfect. I just want to clear the air here. I was not in the Navy for 25 years. I did 4 years. Navy to me stands for never again volunteer yourself. But I did love my time while I was
Oh, no way.
in. Just kidding.
Why is that? Why?
I'm just teasing.
Okay. Cool. That's so funny.
But I have 25 years of doing those, yes.
25 years. And what made you get into loans?
Kind of funny. An ex-girlfriend talked me into it back in 2001. I was doing finance at a car dealership, believe it or not.
Oh, wow.
And she was like, "Oh, you're always so miserable. Here, let me make you more miserable." No.
I'm like, what a great way to add some stress to your plate.
Yeah, exactly.
Uh-oh, so funny. So I wanted to chat today about VA loans because
Sure.
I don't really know many veterans who go into the loan business. And I always tell people that like VA loans are the best loan out there if you are a veteran and not
Yes.
taking advantage of your eligibility for this loan. It's
Yes.
like a crime. It's just the most incredible financing out there. So tell us in your best words, like a little bit about VA and what a VA loan is.
Just real quick, going back to what you just said, I had a guy come to me the other day and say, like, "Hey, I'm really interested in using my VA eligibility, but my agent says that people don't like them and you can't it's not good to you won't be able to get your offer accepted using the VA." And I said,
Right.
"That's a crock. Let's talk."
Totally.
So we went through it. The VA is the best loan that you can get if you are a veteran. Hands down, there's nothing better.
Hands down, of course. Um, so tell us why. And then we can talk about why some listing agents have an idea about VA that makes them more difficult when it's not true. But first tell us about why do you think VA is the best loan, and what about the aspects of VA make it so enticing and such an incredible option?
Well, just the rate game right out of the gate,
Right.
you're 0.5% to, in some cases, 0.75%
Whole percent sometimes. Yeah.
less than what you see advertised all over the place. No mortgage insurance, 100% financing. They'll let you buy up to 4 units at 100% financing. Like, where else are you going to get something like that?
I know.
And, they have this fee called, it's basically an upfront mortgage insurance, but it's a VA funding fee.
Funding fee.
If
Yeah.
you have any sort of disability whatsoever, they even waive that fee. So it's just fantastic for that particular person to go out and buy a home. They can if they wanted to buy a multi-unit property, they can be an owner and an investor at the same time, which is like unheard of.
Unheard of. Yeah. Especially, sometimes at least with the FHA, you can get 2 units still with 3.5% down,
Yeah.
but you can't get 3 and 4 units. VA is the only program out there that allows you to have 3 and 4 units with mortgage, with less than 20% down, but also 0% down and no mortgage insurance.
That saves you 400 or 500 bucks a month right there.
Or more.
Or
I
more.
mean,
Yeah.
like, what if it's $1 million property? That's
Oh
like
yeah, easy.
700 a month. Like, it's
Yeah.
just incredible. And yes, there is a funding fee, sometimes as much as a 2.25 funding
Yeah.
fee.
Yep.
But most of the time it's waived or you only have to pay half. Like we just have to see if you are a veteran out there, what your DD 214 looks like or your COE, your certificate of eligibility looks
Yeah.
like.
The
Uh,
other real big beauty of it is down the road when interest rates do come down. I mean, the IRRRL, there's a loan called an IRRRL, interest rate reduction loan,
yes.
that you basically just lower your payment. You got to time it right, and you bring in your payment to close. But at the end of the day, you're not adding a bunch onto your principal amount, and you're able to lower your interest rates and with no problems at all. No appraisal needed, no
No, right.
termite
No
report
docs.
needed, no docs needed. It's great.
It's basically just like a rate lowering.
Yeah.
You know what I mean? Like it's an instant renegotiation or whatever of your rate.
Yes, 100%.
The other thing, at least here in LA, that is a massive thing when it comes to VA is there are no loan limits.
Yeah.
Hear that,
It's standing up
everybody?
here.
No loan limits on this
Yes.
product. So I have a guy who is a VA and now he owns like a company and makes a bunch of money, but he's a veteran and he bought a $2 million house,
Yes.
0% down, zero mortgage insurance on VA. 2
Yes.
million with no money down. I mean, that kind of risk level, like those kind of like you're not finding any jumbo lender even doing 5% down out
No,
here.
no.
10% is the minimum always with jumbo loans.
And I will
So
tell you real quick, Natalie, there is
yeah,
there is this kind of a trick that you can do with their certificate eligibility. I'm doing this right now with somebody. They
yeah.
now up here the prices are a little bit cheaper than they are down in LA, right? But so I have a guy who went out and bought a $400,000 home. Okay, this
Uh-huh.
was I don't know 3 or 4 years ago. He came back to me and he said, "Hey, I want to use my I want to keep this home with his VA, and I want to use my eligibility to buy another home."
Right.
Okay, you can do two, believe it or not, you can use as long as you have enough eligibility left. So he can buy up to another $530,000 home, still with zero down. His disability, he has a disability, he pays no funding fee. And now he has two homes. He's renting one of them out. Okay. And he has two, both with zero down.
So isn't that entitlement as well? Like how much entitlement he has left?
Exactly. How much entitlement he has left based on the county that he's in, right?
Right, right. So
So,
it depends. So they give you up to a certain loan amount that you can take in total.
yes,
So if one house is only a certain loan amount, he still has this leftover entitlement amount that he is allowed to purchase.
yes,
He can go and buy another house.
yes.
Yes, exactly. The 2 million house is using all of that entitlement. I'm
Yes,
pretty sure. I'm pretty
yes, it
sure.
is. Yes, it is. But it has to, like, it has to work right, but you can make it
Yeah.
work.
I mean, I've had a deal once where she had VA, she only had like 90,000 left in entitlement, and she was going to buy a new home. And of course, it made sense for her to do VA again,
Yeah,
and especially because rates were higher. So we refied during this transaction, the escrow transaction. I was refinancing her current departing
yeah,
residence into conventional so that she could use the entitlement on the VA. And it was very fast. What I
yeah.
was concerned with was like, how long is it going to take the VA to replace the entitlement back after I refi? It was a day,
It's a day.
1 day. It was
Yep.
like nothing. I thought it would take like a week for them to be like, oh, this isn't, the transferring of it, like,
Yeah,
nothing. It took a day and her entitlement was back in
yeah.
and we
Very,
closed on the next loan a
very
day
easy to
later.
do.
It was so easy. Yeah.
Yeah. And
That's
like you said, those bigger, so I'm in Sacramento, our purchase prices are much lower than they are there, and definitely a lot lower than they are in the Bay Area. So I don't really run
sure.
into that there too often. And if you are buying that multifamily property, you're not going to be able to pull something off like that, but in some cases it works.
Right, exactly.
And then one other thing that I've done in the past for people is, VA is typically meant for veteran. So I could buy with a veteran I don't even know, right? And it's meant for veteran and spouse. You can't bring on a girlfriend or a boyfriend or whatever with
Yeah,
you. However,
exactly.
VA does have a little caveat in there if you put 12.5% down. So you got to have the money down, but you can bring them into that and still get that no mortgage insurance type thing.
Exactly. So, and that's been tough. I've had clients that I needed to get married,
Many a times.
right? Where
Yes.
you're like, oh God, you're not married. That's a weird glitch in VA where they don't let a partner, they don't let any co-borrowers, right?
Yes.
So on almost every kind of loan, even jumbo loans, they allow you to have what's called a co-borrower
Yeah.
and not even a non-occupant co-borrower. So non-occupant co-borrower is a borrower who doesn't live in the residence with you, like a parent that needs to sign on. That's obviously not going to happen with VA. I mean, it can,
Yeah.
um, but this is even somebody who lives with you. It's like boyfriend, girlfriend, they're going to move into the property with you, take title with you, you know, for all intents, own the place half with you. The
Yeah.
VA, if they are not a veteran or your legal spouse,
Yeah.
they do not recognize that for whatever reason. And you do have to bring in this interesting 12.5% down.
Yeah.
I don't know why it's like half of 25%
I
in my
don't
eyes
get
is what it's
it.
so interesting. Um, but you do have to bring this down payment to have anyone on the loan who's not a veteran or your legal spouse.
Yeah.
That's a little of a bummer. And so the one time I had clients who got married because it made sense for them to, they were together like 10 years or something, just had never been married.
Yeah.
Um, and then I once had four people on the loan. Only one was um, a veteran,
Yeah.
but they still, even with four people, they still only had to bring in that 12.5%.
Yep, you can make it happen.
Yeah.
It's funny that you said that. I literally they planned on getting married someday, and I was like, hey, go over to the county courthouse steps. Like, we're gonna get this done. Like, do it right now. And within a week, they were
Totally.
married at the county courthouse steps. They didn't tell anybody except for me. Boom, close the loan.
Right, exactly.
Yeah.
I was like, I don't really kind of care what you do after,
Yeah.
but if you want to save this 100 grand, it can save
Yeah.
you 100 grand. I don't know what kind of taxes you're going to pay for getting married and divorced. That might be 100 grand. I don't know, but you know what I mean?
Yeah.
Never know what that's going to mean for your taxes,
Yeah.
but yeah, it's an interesting thing. Back to the misconceptions of VA, which is so interesting. So in Los Angeles County, because of heat, of course, there is something that comes along with VA on every single loan, and it has to be in at closing, which is different from every other kind of loan we do, and that's termite. Do you
Yep.
guys have that up there in Sacramento?
100%. Yeah,
Yeah.
the termite report is one of the biggest hurdles. But what I do is when the offer goes out, I always call the listing agent. And the most important part is telling them like, hey, I don't need to see that termite report as long as there's no live infestation on the home. I can get a form called an NPA 33 form. I turn that in and then voila, you're closing on the home.
Hold on. What's that form? What is it?
NPMA 33.
NPMA. Okay.
Okay, so what that
And
is,
that's in lieu of a termite report?
that's in lieu of a termite report. And what it is it's saying, so let's say there's section one items that need to be fixed. There's some dry
You
rot.
need clearance.
There's,
Right.
little things like that. Well, typically, if you turn that in, all of that stuff would need to be paid. Well, now
Right.
you can use that as a negotiation tool. Hey, I just want credits towards my closing costs of 10 grand or whatever it may be, right?
Sure. Sure.
And as long as there's no live infestation, so no bugs or beetles and all that kind of garbage, the termite company will give you a form called the MA 33 form, okay? And you turn that in lieu of the termite report, and they just clear that condition.
Wow. So it's the termite company that does that for you though.
The termite company does it. Yep.
Aha. Okay, got it. Wow, that's amazing. I didn't know that. Normally, I just forewarn everyone in the beginning, we're in LA, this is VA. The only thing that's going to be different than everything else is that we're going to need Section 1 clearance.
Yeah.
And most of the time, nobody cares. But that's a great, I didn't know that. That's what
Yeah.
happens when you do, just so everyone knows out there, 25% of Chris's business is VA. So
Yeah.
that's amazing. Um, so then the other misconception I feel like is listing agents have this idea, and a lot of people have this idea that if you're doing a VA loan, the seller has to pay the closing costs. Like the veteran isn't allowed to pay closing costs. Isn't that crazy?
Man,
But
I
it's
don't know where they got this
where
stuff.
did they get that from? But it's full on. Like everyone's like, even the veteran is like, I don't have to pay closing costs, right? The seller pays them for me.
I, I
I'm
hear
like,
that all the time as well. So there are some fees that can be paid for by anybody other than the veteran. Okay. But usually they're getting credits or they're getting, I give them about
right.
anywhere
Yeah,
from 12 to 1500 bucks towards their closing costs.
right.
And then that offsets all
Movement
that
doesn't
stuff.
charge them lender fees.
Yeah,
We don't
it
charge our
offsets
veterans
all
lender
that
fees. Yeah,
anyway. So at the end of the day, it's the exact same loan as an FHA or a conventional type loan.
right.
So
Exactly.
it's funny, when I first got into this business in 2001, I heard that all the time, and I was just getting kind of used to, like, what is this VA? Like, how does it work? And da, da, da. And I started really kind of digging into it, and I would hear that from people. I was like, but it doesn't make any sense.
I
I don't,
I had to look into it because I was like, wait, do veterans not pay any closing costs at all? And
yeah,
how is that? What does that mean? And where is that in the certificate of eligibility? I don't see that the seller has to pay their costs. And I think it's more that what we've been talking about a lot in the past year or so is that it's the seller that pays the commissions.
yes,
And I
yes,
think that's where the misconception is. I think that's what people make a mistake on is like they don't, the veteran doesn't pay the commissions of the realtor, that the
yeah.
seller pays the commissions.
And it's funny, like I'll be working with a newer agent that has a veteran, and they're kind of being mentored by an older agent. And that older agent's like, oh, this is going to be terrible. This is going to be, and then it closes in 21 days, and they're like, oh, what? Like, I don't understand. Like, this is supposed to be a nightmare.
Totally, totally. And that's what's interesting as well. I think people, again, different agents and stuff have this idea that because it's a government loan or it's something like an FHA, because they're doing 0% down, it makes them more risky.
Yeah.
And what's really funny about VA is that they have intensive underwriting guidelines,
Yes.
like difficult 2-year minimum underwriting guidelines. Like I would say they're one of my strictest investors,
Oh,
VA.
yeah, for sure.
So the risk levels are not terribly high when it comes to VA and your borrower trying, like we've reviewed that income pretty intensely and it's going to work if it works.
Yeah.
But the other good thing about VA as well, everybody, is that I can take a debt ratio to like
50.
66. I got a duplex in Long Beach last year. Duplex, 1.2 million, zero money down for a veteran, 66 ratio.
Yes. Yes.
What?
I
Yeah.
know. I
There
know.
is no, you can't go over 57, and that's with FHA. And in
Yeah.
most cases, you can't go over 50. 66, the VA lets you go, or more,
Or
depending
more is, yeah.
on their calculation and,
we were actually the other day, we were cracking up. We were like, remember the time we got, I kid you not, it was like a 70 something percent
oh my
DTI. And I'm
God.
not kidding. We ran the DU and we were like, what? Like,
What?
we couldn't believe it.
I know.
Okay, let's go.
It is incredible. I'll
Yeah,
tell my assistants too, they'll be like, it's over, it's over.
just
They
run the
don't
DU.
qualify. I'm like,
Yeah,
no, run the DU, man. Run it.
yeah,
They
right.
might, it might get accepted. Like it's the
Yes.
craziest,
One
yeah.
of the other things that I think is pretty cool with it is the way they look at student loans. Student loans can be a big hang up a lot of the times for, FHA and conventional loans. And you got to calculate all that stuff in there, but they use a 0.5% of the balance divided by 12. So the student loans that you have to calculate against them it's minuscule.
Tiny.
Yeah.
Yeah, exactly. Where most people just use 0.5% per
Yes.
month.
Per
They
month.
take a 12th of that per month.
Yes.
Yeah.
Yeah. So, which is another great reason to,
Huge plus. Huge
yeah.
plus. Yeah, for sure.
So,
Well, this was lovely. Thank you so much for being on
of course.
and chatting about your expertise in VA for
Yeah.
sure.
I'm glad I taught you some about the
Oh my
NPMA
God.
form.
Tell me that word again.
NPMA 33.
That's really annoying. NPMA.
Yes.
Jeez Louise.
And matter of fact, if the termite company doesn't have one, you could just go online and download one, and then you can just email that over to your agent when they're making the offer. Make sure you call the listing agent and say, "Hey, we're going to get around the termite report as long as there's no live infestation." You email that over to them to give to the termite company that's going out and and then they'll fill it out for you and you'll get it back.
Insane. I love it. So good.
All
Thank you
right.
so much.
Of course.
I'm
Of course.
definitely using that.
Awesome.
So good.
Awesome.
So good. All right, wonderful. Well, thank you so much for joining us today. Thank you, everybody out there, for listening. And join us on the next one.
Thanks for listening to Mortgage on My Mind. If you're ready to start your mortgage journey or have any questions, I'd love to help. With 20 years of experience, I make the process as simple and stress-free as possible. Check the show notes for my contact info, and don't forget to subscribe, leave a review, and share this podcast. Until next time, I'm Natalie Salins, here to help make your real estate dreams a reality.